In today's show, unprecedented capital inflows into Bitcoin removed 12,000 BTC from Coinbase in an hour. As Lex Mavosky points out, 12,354 Bitcoin withdrawn from Coinbase in an hour. Institutions or not, that's still a significant outflow. And as Raphael Schultz-Kraft points out from Glassnode Analytics, unprecedented capital inflows into Bitcoin as measured by realized capitalization. Over the past 6 months, realized cap has surged a whopping $250 billion, which is an increase of 200%, which signifies a healthy bull market. Also in today's show, breaking news. Reports suggest that Goldman Sachs is now offering Bitcoin derivatives. That's right, the banking giant has reportedly opened up futures trading on Bitcoin to Wall Street execs. And while we're speaking about institutional FOMO, more breaking news. Citigroup considers crypto amid a surge in customer demand on Wall Street. That's right, the financial services firm is considering offering crypto-related services to its customers in response to rising demand, specifically from asset managers and hedge funds. I'll be breaking this down for you in today's show. And as the Bitcoin Archive points out, all the banks are coming to Bitcoin. Morgan Stanley, Goldman Sachs, JP Morgan, Citibank, plus hundreds of more. They're coming. It's inevitable. Also in today's show, we'll be discussing where the Ethereum price is likely to go next after entering price discovery mode, surpassing $3,500. One retail investor wrote a report entitled Ethereum, the Triple Halving, in which he presents an argument on why he thinks Ethereum could see a meteoric rise in value to around $150,000 by 2023. And when asked where Ethereum could be headed in the next couple of months, he goes on to share it definitely can go much higher. I think we can see the price go to 10,000, where a lot of Ethereum bull price targets begin to kick in and people take profits. I think we'll head on up to that $10,000 to $25,000 range, hit a lot of supply and could see some big drawdowns and consolidation at that point. I'll be breaking this down for you in today's show. We'll also be taking a look at the overall crypto market. As you can see, Bitcoin and Ethereum are currently correcting while some altcoins are in the green. But where's the Bitcoin price likely to go next? Find out all this plus so much more in today's show. Here at Crypto News Alerts, I drop a brand new episode every single day, so be sure to smash that subscribe button. That's right, and turn on all notifications to receive daily premium crypto news alerts every single day, just like this. And before I kick off today's show, I want to give a special shout out to Bybit, one of the leading cryptocurrency exchanges where you can trade some of the top cryptos, even use leverage to short or long these cryptocurrencies. And they have a special promo running right now where you can receive up to $1,000 deposit bonus for a limited time by using my referral link in the description right down below. Not only that, but every trader who makes their first BTC deposit will also receive an additional $10 coupon. So this is truly a no-brainer. It'll only take you about 25 seconds to register. So go ahead and use my referral link in the description right down below. Claim your $1,000 bonus and let's start stacking those sats. Shall we? All right, welcome back to another episode of Crypto News Alerts. I'm your host, JV. We have a lot to cover as usual, so let's dive right in. Another day, another spike in Bitcoin, leaving major exchange Coinbase as funds pour into the largest crypto. Data from on-chain monitoring resource Glassnode Analytics showed 12,354 Bitcoin, valued at $694 million, being withdrawn from Coinbase's order book in a single hour today on Friday. Yeah, Coinbase sees another Bitcoin balance squeeze. As the largest exchange in the US, Coinbase has frequently been the venue for major Bitcoin buy-ins this year. Sudden tranches in excess of 10,000 BTC headed to private wallets is far from unheard of, but nonetheless demonstrates a desire to at least store Bitcoin for the long term instead of keeping it within an easy reach of a point of sale. And as you can see right here, brought to you by buybt.com, it shows you the Coinbase Pro Bitcoin balance chart. You can see most of Bitcoin being moved off exchanges and into hard wallets. And for analyst Lex Mavosky, the type of investor behind such transactions remains uncertain, but it could be a private individual or a small group, as well as an institutional investor or corporate client. Quoting him right here on crypto Twitter, 12,354 Bitcoin withdrawn from Coinbase in an hour. Institutions or not, that's still a significant outflow. The data comes hand in hand with on-chain indicators staying firmly bullish. This week, Glassnode co-founder Raphael Schultz-Kraft highlighted a surge in Bitcoin's so-called realized cap, likewise supporting the broad buying thesis. The realized cap is a measure of Bitcoin's market cap based on the price at which each coin last moved. It provides a useful insight into the market composition and trader sentiment and produces a significantly different total to the traditional market cap. Quoting Raphael Schultz-Kraft right here, number one, unprecedented capital inflows into Bitcoin as measured by realized cap. Over the past 6 months, realized cap has surged a whopping $250 billion, an increase of 200%, which signifies a healthy bull market. As you can see on your screen, 250 billion plus in this chart. He also says, number two, in the past weeks, realized cap has been increasing steeper relative to market cap, leading to a decline of MVRV despite a flat Bitcoin price. The MVRVZ at this price level in February was 7.6, today 4.4, and at the previous cycle tops 10 plus, as you can see right here on your screen. Number 3, for comparison, the entire Bitcoin market cap was only 250 billion half a year ago. The same amount of realized cap has increased since then. Realized cap is now as high as the market cap 5 months ago in mid-December when it was $370 billion. Want to hear something interesting? The Ethereum market cap is currently above 400 billion, which is higher than the Bitcoin market cap was just 5 months ago. Crazy, right? And relative to the traditional market cap, the realized cap can still increase significantly before signaling the top of a bull market. The MVRV, which measures the ratio of the two metrics, measured 4.4 this week compared to 7.6 in February. And before I break down our next story of the day, breaking news, reports suggest that Goldman Sachs is now offering Bitcoin derivatives, as well as Citigroup considering crypto amid a surge in customer demand on Wall Street, as well as they see Ethereum rolling. Why did Ether price reach $3,500 and what's likely next for Ethereum? But before I break this down, let's first take a quick look at the overall crypto market. We can see Bitcoin down 2.5% for the day, but still trading above $56,600. We have Ethereum, which recently reached a new all-time high in price discovery mode, correcting slightly today, down 1.6%, trading at $3,458. Dogecoin reached a new all-time high the other day of 69 cents and is currently back in the green, trading at 62 cents. We have Polkadot up almost 4%, trading above 41 bucks, and Binance Coin down 3%, trading at $627. All right, now let's break down our next story of the day, shall we? Investment banking giant Goldman Sachs has reportedly opened up futures trading on Bitcoin to Wall Street execs. According to Bloomberg Law, last month the investment firm began offering trading with non-deliverable forwards, a derivative tied to the price of Bitcoin, roughly $56,000 at this time, for which investors can be paid in fiat. Goldman Sachs reportedly lessens its risk to the crypto asset's infamous volatility by buying and selling Bitcoin futures and block trades on the CME. Using crypto trading unit of DRW Holdings, Cumberland, institutional demand continues to grow significantly in this space, and being able to work with partners like Cumberland will help us expand our capabilities, said Goldman's Asia Pacific head of digital assets, Max Minton. He added that the offering was paving the way for the company to evolve our nascent cash-settled cryptocurrency capabilities. Goldman has been seemingly increasing its exposure to the crypto market following price surges in tokens and institutional players like Tesla adopting cryptocurrencies. Rumors persisted that the investment firm planned to set up a cryptocurrency trading desk after first announcing one during the 2017 bull run, which it confirmed in March of 2021. The CEO, David Solomon, hinted in an interview last month that the firm was keeping a close eye on digital currencies amid increasing demand for crypto exposure from Goldman's clients. The investment giant also filed for an ETF in March that includes the option to add exposure to the king of all crypto. Let the institutional FOMO, like a mofo, continue. And before I break down our next story of the day, Citigroup considers crypto amid a surge in customer demand on Wall Street, as well as they see Ethereum rolling. Why did the Ether price reach 3,500 and where is it likely to go next? But first, let's take a quick look at the overall crypto market cap, sitting just under $2.4 trillion, which was an all-time high reached yesterday, with 309 billion in volume in the past 24 hours, and the current Bitcoin dominance, the lowest it's been since 2018, currently at 44.6%, with the Ether dominance at 16.9%, and the current Bitcoin market cap sitting above $1 trillion, with Ethereum above 400 billion, which is a new all-time high. Now checking out the top gainers within the top 100, we have QTUM up 74%, trading at $32. Bitcoin Diamond up 55%, trading above $6. Lisk up 55%, trading just under $10. OMG Network up 46%, trading at $14.65. And Ethereum Classic up 297% for the week and 30% for the day, trading just under $140. Now checking out the top losers within the top 100, we have Bitcoin Gold down 17%, trading at $133. OKB down 10%, trading at $32.88. Phantom down 8%, trading at 73 cents. And Venus down about 8.5%, trading at $110. Now, out of this list of the biggest gainers and losers, which altcoins are you currently most bullish on during this bull market? Let me know your thoughts in the comments right down below. Now, checking out one of my favorite indicators is the Crypto Greed and Fear Index. Shows we're currently rated as 64 in greed. Yesterday was a 65, last week a 51 neutral, and last month a 72 in greed. And if you're not familiar with the crypto greed and fear index, extreme fear can be a sign investors are too worried. That can be a great buying opportunity, aka BTFD, buy that freaking dip. And when investors are getting too greedy, that means the market is due for a correction. All right, now let's break down our next story of the day. Citigroup is reportedly considering offering crypto-related services to its customers in response to rising demand, specifically from asset managers as well as hedge funds. The financial services firm's global head of foreign exchange, Itay Tuckman, told the Financial Times on Friday that the investment bank was already exploring the possibility of providing crypto services to its clients. Trading, financing, and custody services are being discussed, but Tuckman said that the firm would not be rushed into launching something that would worry regulators. Quoting him here, "We shouldn't do anything that's not safe and sound. We will jump in when we are confident that we can build something that benefits clients and that regulators can support," he shared. Tuckman said the bank witnessed an increase in the number of clients inquiring about Bitcoin starting in August of 2020. At the time, Bitcoin price had climbed 33% in the space of a month, from $9,000 to $12,000, and the global crypto market cap was around 1/10 of what it is now. But Citigroup is apparently in no hurry to jump on the bandwagon, even with Bitcoin currently being priced at $56,000. Tuckman said that the firm wouldn't fall victim to its own fear of missing out, better known as FOMO, and would instead play the long game with crypto, which the bank believes will still be around for a while yet. Quoting him here, "I don't have any FOMO because I believe that crypto is here to stay and that we are just at the very beginning of the market. This isn't a space race. There is room for more than just one flag," said Tuckman. And I agree 100% that this is the very beginning of the crypto market. I feel it's still just a pup with a $2 trillion market cap. We can see a $10 trillion market cap by the end of this year. Just saying. Let me know if you agree or disagree in the comments below. Now checking out this tweet from the Bitcoin archive. All the banks are coming to Bitcoin. Morgan Stanley, Goldman Sachs, JP Morgan, Citibank, plus hundreds more. They're coming. It's inevitable. That's right. There was a recent report that NYDIG has a partnership with all the major banks across the United States. We're talking about over 300 million bank accounts in the United States having access to buy, sell, and hodl cryptocurrency, which is a pretty big deal. And before I break down our final story of the day, they see ETH rolling. Why did Ethereum price reach 3,500 and where is it likely to go next? But first, I want to remind you to smash that show more button right below this video in the description for a detailed analysis of what's going on in the crypto market. This goes for all 775 plus videos right here on my YouTube channel. Also have some very helpful resources for you to plug into, including my daily letter, which goes out to over 30,000 subscribers every single day. To subscribe, visit letter.cryptonewsalerts.net. Also have a blog I update daily, which could be found at cryptonewsyes.com. Also be sure to smash that subscribe button right below this video in the description to receive daily premium crypto news alerts every single day, just like this. You can also find me on all the major podcasting platforms, from Spotify, the home of the Joe Rogan Experience, to Apple's iTunes. You can also follow me on Twitter. My Twitter handle is cryptonewsyes. And for those of you on Facebook, I do have a private crypto Facebook group entitled Crypto Alchemy. To join it, click this link, request to join. I'll be sure to plug you in. And for those of you on Telegram, I do have a private crypto Telegram chat, which is uncensored. To join it, click this link. You'll automatically be added, and I'm looking forward to connecting with you personally on the inside. And for those of you on TikTok, be sure to follow me there. All right, now let's break down our final story of the day. The next few months promise to be exhilarating and decisive for Ethereum, as its recent all-time highs above $3,500 put an even bigger spotlight on the crypto and its smart contract blockchain, Ethereum. And I want to remind everyone, 12 months ago, Ethereum was trading at $90, meaning it more than 35x in the past 12 months. Crazy. I also remind you, where the Ethereum price is currently at is where the Bitcoin price was 1 year ago. Deja vu, right? As the crypto markets continue to grow 5 months into 2021, both the preeminent Bitcoin and the host of other blockchain projects and tokens have soared in value, chief amongst them being Ethereum, the second biggest crypto by market cap, which recently surpassed a $400 billion market cap. Indeed, Ethereum went on a late April surge backed by several factors that led to a rapid price appreciation across the crypto markets. The boom in the decentralized finance sector, coupled with the burgeoning non-fungible token or NFT space, has been attributed to major reasons for Ethereum's price boom, as these technologies are mostly based on the Ethereum blockchain. However, the importance of the recently implemented Berlin upgrade and bullish Ether options traders have helped push the price of the network's token even higher. The booming price of Ethereum has also led renewed talk of a fabled Ether/Bitcoin flippening, which would see Ether overtake Bitcoin as the most valuable crypto by market cap. While that is still a long way off, as Ether's $411 billion market cap is where worth just 39% of Bitcoin's 1.06 trillion market cap, ETH is increasingly catching up. And as I pointed out, the Bitcoin market cap 1 year ago is where the Ethereum market cap is currently sitting, which is like deja vu all over again. This is evident in the sheer amount of capital that is being poured into Ether by investors. CoinShares recently estimated that institutional investment managers and firms hold around 13.9 billion in Ethereum, with 30 million worth of Ethereum purchased in the last week of April and around $170 million bought over the past calendar month. The question on the minds of crypto traders, hodlers, Ethereum proponents, DeFi and NFT users, and the wider community is fairly obvious. What lies in store for Ethereum over the next few months, and can the network keep up with the demand? Let's talk about it. Maria Fernandez, advisor to the global board of directors of Goldman Network, a protocol built on Ethereum's second layer that facilitates computational resource sharing, told Cointelegraph that the next few months promise to be exciting given the growth until this point. She was cautious to give an outright price prediction for Ethereum. Fernandez believes that the upcoming changes to the network will pave the way for further growth and value across the Ethereum ecosystem. Quoting her here, "I'm in as much awe as everybody else, so out of the abundance of caution, I'm having a hard time making predictions, but I can definitely say that $10,000 Ethereum is no longer a pipe dream, but something that's likely to happen. I like to piggyback off of that. My prediction for Ethereum before the end of this year is between 10 and 15,000. Let me know your thoughts in the comments right down below." Fernandez agreed that the price of Ethereum could certainly go higher in the next couple of months, leading to the deployment of the hotly debated Ethereum improvement proposal 1559, which will form part of the London hard fork. While the looming EIP 1559 will play an integral role, Fernandez said that Ethereum's utility has already been proved as a better solution for various financial tools, and that is a key driver for the price of Ethereum. The NFT fever, coupled with 2020's DeFi summer, brought in swaths of new users that are here to stay. And she further added, "Now 2021 has been proving to be the year of layer 2 solutions, which alleviated the challenges with Ethereum scalability, and that, together with an incredible improvement on the UX of the application layer, which makes it easier to use an Ethereum-based app than, say, online banking, clearly proves that Ethereum as fuel, as hard money for the open finance ecosystem." So there you have it. Also, Nikhil, a retail investor and medical resident, recently published a research report titled Ethereum, the Triple Halving, in which he presents arguments on why he thinks Ethereum could see a meteoric rise in value to around $150,000 by 2023. Could you imagine? Imagine that. And when asked where Ethereum could be headed in the next couple of months leading up to the London hard fork, he provided Cointelegraph with an extremely bullish and admittedly speculative prediction for the smart contract blockchain's native token. Quoting him here, "It definitely can go much higher. I think we can see the price go to $10,000, where a lot of Ethereum bull price targets begin to kick in and people take profits. I think we'll head on up to the $10,000 to $25,000 range, hit a lot of supply, and could see some big drawdowns and consolidation at that point." Let me know if you agree with his $10,000 to $25,000 Ethereum price prediction for this year. Also, his lofty long-term price prediction for Ethereum does need to be put into context. If the price of Ethereum were to hit $150,000, the market cap of the crypto would be around 17 trillion. So do keep that in mind, considering there is 115 million Ethereum in circulation. Unlike Bitcoin's finite supply of 21 million Bitcoin, there is no supply cap for Ethereum. That's right, which is a part of the reason that the network is looking to implement EIPs that introduce some sort of deflationary mechanism like EIP 1559, which ultimately means they're trying to make Ethereum more like Bitcoin with a finite hard cap limited supply, which would drive up the price and more people will start to use Ethereum as a store of value. How many of you are currently bullish on Ethereum, and do you think that is realistic for Ethereum to hit $150,000 in the next 3 years as he predicts? Let me know your thoughts in the comments right down below. Now for a quick recap of what I covered with you right here in today's show. Unprecedented capital inflows into Bitcoin removed 12,000 BTC from Coinbase in an hour. Also in today's show, I shared breaking news. Reports suggest that Goldman Sachs is now offering Bitcoin derivatives, as well as Citigroup considering crypto amid a surge in customer demand on Wall Street. Let the institutional FOMO like a mofo continue, and as the Bitcoin archive points out, all the banks are coming to Bitcoin. Morgan Stanley, Goldman Sachs, JP Morgan, Citibank, plus hundreds of more. They're coming. It's inevitable. That's right. Also in today's show, I shared some very bullish Ethereum price predictions. So where do you feel the Bitcoin and Ethereum price are likely to go next? Let me know your thoughts in the comments right down below. Well, that's going to conclude today's show. As always, I appreciate you tuning in and journeying along with me inside this incredible crypto matrix. If you gain value out of today's show, be sure to smash that subscribe button. That's right. And turn on all notifications to receive daily premium crypto news alerts every single day, just like this. And real quick before I go, I want to give a special shout out to Bybit, one of the leading cryptocurrency exchanges. They have a special promo running right now where you can receive up to a $1,000 deposit bonus for a limited time by using my referral link in the description right down below. And also, every trader who makes their first BTC deposit will receive an additional $10 coupon. In Bitcoin, it's truly a no-brainer. Take advantage of this. However, if you're going to trade, please do so responsibly. It's only going to take you about 25 seconds to register. Claim your $1,000 bonus. Let's start stacking those sats, and I look forward to seeing you on tomorrow's episode. Peace.